Rahul, Dr. Darwish.
Assalamu alaikum and good afternoon. I am the head of digital delivery in Bank Al Bilad as well as acting head of digital solutions. So we are dealing most of the day with our partners, fintechs. So today this event for me is a very good place to express and explain some of the experience we have with our partners in the market. I have almost 33 years of experience in IT, digital banking, as well as business, especially corporate business. My doctorate degree actually is in digital government, actually in intergovernmental information systems, connecting governments together. So it's again back to connectivity and API integration and blockchain. Hope that I could add a value to this discussion today and make use of the time with you guys to share some knowledge that we have in banking industry.
Dr. Ali, Brother Ali, please.
Assalamu alaikum and good afternoon everyone. My name is Ali Assaf. I lead business development at Mambu. Mambu is a modern cloud core banking system provider. We power over 260 banks, fintechs, neobanks and digital lenders globally. We started as the first to put core banking on the cloud in 2010. Today we have customers in every continent. Some of our flagship customers in region are Vision Bank in Saudi Arabia and Weo Bank in Abu Dhabi. Happy to be here and honored to be here with all of you today. Looking forward to the rest of the panel. Thank you.
Thank you, distinguished panelists. We have very expert people from the service providers, practitioners, and everyone specifically providing services in Saudi, so they can give you very truthful insights and the problems they are facing. So my question is to Mr. Rahul. With Saudi emerging as a global financial hub, what is the major strategic digital capability the bank must build to stay, competitive?
So I think it's a challenge that spans the entire Middle East region. The outside of, take for example, some place like UAE, the outside shell is getting developed and it's starting to target the global markets. It's starting to attract global capital. A lot of expats are moving into this region. I was seeing stats yesterday from Saudi. Over 3 million people have been added in the last 2 years or so. So this place is attracting a lot of global capital and people. But in terms of the overall approach of any financial institution, there's a lot more that needs to be done when it comes to digital initiatives. Number one is the mindset change. The board at the top will have to encourage a lot more initiatives. Number two is probably the entire Middle East depends heavily on the US and some of the developed initiatives in the UK for building themselves out, and that's something they need to sort of expand into what the other countries are also doing. That's on the mindset side. The technology side, there's more and more a need for new technology to come in and for participants and constituents to experiment more so that they can test out and figure out which technologies are the most relevant. That is point number two. The third thing is again, the RegTech as an ecosystem is getting stricter and tighter and tougher across the Middle East. So the ability of people to respond to it on a serious note is something that banks still need to develop. Maybe banks are there, but some of the new banks and fintechs are still sort of coming up to speed. DNFPDs is another sector where people need to really understand, rather than have just a tick in the box approach to regulatory initiatives. They need to develop a serious understanding of why this is being done and what is their individual role.
Thank you, Mr. Ahmed. And I'm just deviating from the question. I just remember one point you come to the RegTech point of view. And SACA, right? Saudi SACA tax agency, and they have very stringent on the RegTech side. Right. So have you had any experience, because you have presence in the same ground? So they are in the full, I think they have the QR code thing, is a very advanced thing. You can have a global registry where you can check how complex the bank or most. So can you just have a 1 minute on that?
Sure. So I think the regulatory authorities are pushing ahead across this region on a lot of important initiatives, and what they're doing right now is giving a lot of flexibility and leeway to the constituents, which means that if you are starting to do the compliances seriously, they will give you a little more time. What they are not open to is you misrepresenting that you're doing compliances and you coming out very short or not even having started something around that. because I was in a session with the DFSA compliance head, who said we went to do an audit of a client in Dubai, and I've heard similar stories for Abu Dhabi and for Saudi as well, where the regulatory authorities have shown up, misrepresentations have been made. So, for example, do you do continuous monitoring of clients? And the person who's been subject to the audit saying, yes, we do. And he said, okay, fine, then show me what the result was 30 days ago. And to that, the person is, if he's unable to produce audit evidence or documentary evidence to that effect, then DIFC and ATGM for sure have shut down those companies. So in case of serious non-compliances, your business can be impacted, you can be stopped from doing business. The person in the business has been debarred from starting another business for the next number of years. So these are very serious consequences of non-compliance. Again, Middle East has taken the lead here in making sure that the impact of non-compliance is felt, and it is felt immediately. And to that extent, I think while the authorities are allowing people who have the intent to comply, but that time period is also very short, and very soon you'll start feeling the impact of non-compliance.
Thank you, Mr. Ahmed. Going back to Dr. Darwish on the previous question, being in banker these 3 years. So what are the most important capabilities your bank must build in the era of fintech and AI and all?
Yeah, this is a very good question actually, especially in this challenging era and the era of fintechs growing in the market. So two main aspects or two main, let's say, domains. Banks should think deeply about how and when and the priority of availing these services. The first one is the banking as a service. By availing all or exposing all banking services that we have today for our customers to the customers of our customers. So let's say instead of that, I have to sell these products and becoming the manufacturer of everything in banking. Today, I'm leaving this to the fintechs to come and solve problems of the customers, and I will be their back end or back office to provide this as a banking service. With open finance and open economy trends that we have also today in the market, this is becoming very essential. The one who wants to continue in the market has to build these capabilities. Some of the banks took up on the priority of unbank the bank, and they are building their own fintech companies. Some others is building a venture capital to fund the development of fintechs. And we are in Bank Al-Billah are taking the third approach to help those partners and partnership with them in order to be able to help them building their business. The key aspect here is when you try to do design thinking and empathy for those people and try to think and put yourself on their position on their side and think about what these fintech companies are looking for. By doing this, you can get more of the value that you want to build. The other aspect, Manish, I'm sorry for being a bit longer, the open banking capabilities. Today, with the payment initiation services and account information services coming to the Saudi market, and the value that banking sector is giving to those third-party providers who are going to serve my customers by giving them additional and value-added services, which might not be of interest for banks, is going to give also an added value to the market in order to be able to solve the customer problems and giving them enhanced services like personal finance management, like payment initiation services, different models and different use cases that we have today in the framework of SAMA.
Thank you. Brother Ali, you want to add any more points on that?
I think on this topic specifically, anything you add after Dr. Ahmed is just additional. To follow up on what he mentioned, I think the one extra thing that we've seen successful is the banks building innovation hubs and inviting all of these fintechs, giving them sandbox, giving them the technology to build and solve for these problems, and empowering them to get their licensing faster and go to market faster. And of course, as he mentioned, through banking as a service, giving them the ability to be extended into different channels to reach the customer. Today, the customer doesn't only want to deal with the bank or with the branch. They want to deal directly with the automotive dealer for an auto finance. They want to deal directly with their food ordering platform to get a specific card that gives them points there. And yeah, some of the banks like Bank Al-Bilad have taken these initiatives, and look forward to seeing what's coming next.
I have one observation. I'm not comparing the things, but as a panelist, we can discuss that with people for the audience to understand. And just see the story of the mushroom bank in UAE. And what they have done is, last 3 years, they have reduced their branches by almost 1 or 2, coming from 40 to 100. Okay. So what they're telling us is they are adopting banking as a service, and their more single window approach is the application. But I'm not seeing that trend in Saudi specifically. So is there any specific reason being in this market?
I cannot say there is a specific reason. I think it's just the customer adoption. Yet there has been neobanks and digital banks maybe longer in that market, and people are already used to banking without seeing a relationship manager, without visiting a branch or going to sign a document. I think it's part of the transformation that takes place, apart from the technology, the change management to the consumer behavior, both for SMEs and
Exactly. That's the point I wanted to say to the audience, that the consumer behavior inside GCC itself is different. So we can't bring something exotic to there. The adoption rate is very less. Okay, thank you very much. It's a very nice interaction. So going back to the next question, as an open finance evolve, who will own the customer relationship? Bank, fintech, and platforms, or how will monetize the shift? My question is to Brother Ali, since you are in the front of the payment.
Great. No, I think that's a great question. I think before the relationship, it's the data. Where the data sits and who owns the data. I think until recently, the data was always owned only by the one financial institution. Today, with open banking and open finance, the data's ownership is back to the users, and they decide when to give consent and who to share it with and for what purposes. The relationship, I think, will be fragmented. It will no longer sit with one entity. It will be whoever can provide me the best service with the most convenience at best rates will be able to own that direct relationship with me. Even if at the end of the day, the 3 different providers are all powered by Bank Al-Bilad, for example, the relationship for me as an end user will be with X fintech, regardless of who is the one doing the hard work, just because that's who I've chosen to go directly to.
Dr. Darwish, you want to
I think just adding to what Brother Ali has just mentioned, there is a shift of the front end from banks to fintechs and TPPs. And I remember 3 years back, I was in a conference, and that topic was a very hot topic to discuss. Are we really losing the front end as banks to the fintechs? And my simple answer is yes. And if the bank is not able to advertise and use the fintechs as a channel, another or a new channel for their communication with the customer, I think banks will start losing that front end, and it will be very difficult for them to reach to the customers in the normal way that we have today. So banks by time will focus only on core banking services and core products, like for example financing, and especially with large financing and structured financing, and moving the microfinancing, micro-lending, and this kind of buy now, pay later, and such services to the fintechs. The second part about also the monetization of these services, I believe that today the fintechs, as they are now bringing the business to banks, are going to get some profit share or commission, as well as, let's say, acquisition fees, because they are now bringing a new customer to the bank, especially when we are talking about unbanked customers or low banked customers who are underserved by banks today. So those customers, by the fintech solutions, will become customers of the banks indirectly. However, this will make it much bigger as a pie for banks to get some profit and share that with the fintechs as a front end interfacing those end users.
Thank you. Rahul, do you want to add any points?
Yeah, sure. So it's a very interesting conversation. I think there are 2 kinds of stakeholders for a bank. One is the investors, and the other is the customers. The customers get the service, get your financial products. The investors who have committed capital, who back you till you continue operations. And at some point in time, the bank has to differentiate between these objectives, saying, do I want to reach out and own the customer, And historically, this was true. If you own the customer, you owned all the profit. But no longer. I think things are changing. So if you want to have ownership of the customer, you will have to compromise in your return to the investor. If you want to maximize the return to the investor, maybe some of these ownerships you will have to hand over to the person who will specialize in that aspect only. So if let's say I have grasp over the teenage market in, let's say hypothetically, Saudi, or if I have access to all the ladies who have the entire household spent at their disposal, then that's a separate specialization. If I want to appeal to the employees of Saudi, another different specialization. Now if the bank starts to Dr. Darwish's point, if the bank starts to advertise and market to all these segments, number one, it dilutes its specialization to each one of them, because I'm now for everybody. Instead of saying, okay, I'm going to take care of your need, your need, your need, your need separately. And the spends in terms of acquiring these customers are going to be huge. And historically, once again, retail banks have never been profitable across the globe. Even people like Goldman Sachs have tried retail banking, burned their hands and come back saying, oh, we can't do this. They specialize in institutional banking once again. So banks will probably have to decide where do they want to, what is the direction they want to take. If you want to maximize the returns to shareholders and investors, you'll have to probably end up giving up your ownership of clients or the entire channel. You create the product, you create the platform, anybody who loves the platform will plug into it and use it for their specific purposes. And I think that's where it's going. It's no longer possible, economically viable to own the customer right till the end, is what my personal individual observation is.
Thank you, Ahmed. And now the AI is advancing very quickly, as we know. What is the guardrails? Guardrails we should protect the customer trust and risk integrity while still enabling the innovation. We have AI, even though we are dealing with a very big thing, sensitive issues, the banking. So where should be the guidelines we need to put up while we are enabling the innovation? So I think yeah.
So I think the same advancement in AI that is useful for the banking industry, there's another set of AI that is also growing in terms of faking documents used for all kinds of frauds and malicious activities. I mean, before Mambo, until 2023, I was with a company called Payoneer, which is a global cross-border payments provider, similar to PayPal. And the amount of fake documents back then that we used to get wasn't only the issue that we had, it's the amount of false positives and true negatives that we used to have. I think, of course, first of all, protection from any kind of fraud and malicious activities. The same investments that's maybe put in deploying new AI systems and features, I think a similar budget needs to be set to prevent any malicious use of these tools. Data protection, of course, when we talk about guardrails, yes, there is strict data privacy and data protection policies in place, but of course ensuring all the systems are used to prevent any misuse or any use by any accounts by other users. And top of all, I think, is educating the end customers, the end users. Having campaigns to show the importance of not using any of your login credentials, your personal data, as silly as it sounds, but no one needs to know your full name, your date of birth, and your other information, because that can be used very easily with available tools today to crack different kinds of security. So I think it's both on the institutions. I mean, the regulator has done a lot on the RegTech side, but yeah, the final one should be on the market itself. And from financial institutions' perspective, I think awareness campaigns is the best they can do, because they already invest a lot in putting the right technologies and policies in place, but it's the end users that need to know how they're using their data.
Thank you. Any points to add, Darwish?
Yeah, I think Ali covered most of the things, but I can just add a few points, if you allow me. I think the governance is very important here at this level, and we are missing still a real framework to govern the AI at different levels. Sorry. So making sure that the AI is ethical, that there is no, let's say, leakage of data, there is no abuse of customer data. One of the things that we have wisdomed with an POC with one of the AI companies from Asia was the bias of the AI model. The AI model was actually developed outside Saudi Arabia, and we gave them 10,000 records to train the model and test it. So we have used 3,000 records to do the first round of testing, and every time we are doing more training of the model, we get better accuracy and precision of the decisions. So about false positive, false negative kind of things. So by training the model with 6,000 records, 3,000 each into rounds, we start testing the model with the actual 4,000 records, and we get surprised that the model is biased up to the level that it was rejecting all people from a certain region. And that was very strange for us because the data that the AI model was trained using in the first 2 rounds shows that majority of the people in this region is failing or getting into default, and they don't complete their commitment, which has been taken as a, let's say, a rule in the model, and then it starts rejecting all people. However, the actual result shows that those people has already fulfilled their commitment. So human supervision on top of any AI model being used is very important. Otherwise, we will lose control. And today, some people are asking حتى ChatGPT some religion or religious questions. Come on, yani, don't leave yourself to the AI up to that level, which is really taking you into a crisis. So the trust in AI, and by the way, this is very important note to mention that financial sector is the least sector in adopting AI as of today, because most of the financial people don't trust to leave their financial decisions to AI, which is adding to the points that we are talking about here. And also one point which Ali has mentioned about data privacy. Some of generative AIs, and I don't want to talk about agentic AI, but mostly generative AI, they are cloud-based, and the data can be shared with the cloud version of it, so in order to be able to use it for other customers, which can expose financial sector into unpleased, data privacy issues.
Thank you. Rahul, any closing?
Yeah, so I'm going to rehash and rephrase what both these gentlemen have said. I'll tell you my experience. I started typing an email out about 4 weeks ago, and the email was on Google, and Google started giving me suggestions on who all I can copy in the same email, and what should I write a little differently, so that based on the previous reading of my past emails, what made sense most to Google, and that sort of spooked me. So to Dr. Darwish's point, any kind of AI that is introduced to me without my consent tends to scare me a little bit. Financial decisions, all of us here, including the richest people in the world, have finite amount of capital. You don't want to yet trust AI with all the money that you have, because you may need it on a rainy day, but logically it may not make sense to AI. So logically it will continue to suggest an investment to you, whereas you're getting your daughter married 4 days later and you don't have the money to pay for some of the expenses there. So AI is still very, very early. Now the places where AI can make an impact in banking is if I'm an employee and AI can read my bank transactions and it can analyze that my bank balances are very low by the 23rd or 24th of every month, not just 1 month, every month. Can it push that record onto the let's say early salary or salary financing team within the bank, and the bank can reach out with an email saying, guys, we know that you're a little low on cash on the 24th, why don't we throw in a line and you can settle this on the 1st of the next month? That could be very helpful. So AI for data read and analysis and adding an additional service to me will be useful. But AI trying to give me suggestions that are absolutely not my needs could be very scary for me. So it's a sort of a balancing act. And I'm the old sort of traditional finance guy, so personally I continue to be scared of AI, whatever be the field.
Thank you all the panelists, and we're running shortly out of time, so do you have any questions from the audience? I think no questions means you understood and you were happy. Yeah, one question, please.
See, there's the climate evolving and a lot of fintech and
Yeah, give me a minute.
Thank you. I'm Praveen Ladda. Been with the Saudi Arabian banking industry for almost 13 years with Al-Raji, ANB and SAP now into the digital as well as the product side. So just to this interesting discussion. Now there's central bank, there's a regulator, there are a lot of fintechs and new age banks, the non-banking financial players which are there, and all of a sudden we see at least as we mentioned 50 odd fintechs and 200 odd. So how does the emerging space look like in a couple of years? How will the central bank be, as Dr. Darwish also said that there has to be a proper framework. Maybe sometimes it gets intrusive for the customers, getting bombarded with sort of offers daily in and out. So one is that definitely the fintechs, they need to monetize. The banks also have a lot of strain on their margins and fee incomes. So one is there where banks and the fintechs are on a different platform. Banks have invested a lot of money on compliance, infrastructure, KYC. Fintechs are just front-ending that, and the central bank is there. So how is the entire climate and ecosystem going to evolve in a couple of years' time when with the way the customers also, the new age customers, 18 to 25 years of age, they're getting so many financial products across the line. What would be the central bank doing to make them understand better what to do, how to go about their personal finance management and all? I think any of Dr. Ahmed or anybody can have a foresight into this. It will really help us all here. Thanks.
Right.
Thank you, Mr. Praveen.
If my colleagues allow me to answer this question based on being in a bank, and occasionally I have my team here, Rima and Noha sitting, who are working heavily in banking as a service and open banking, and we are in touch with fintechs and this ecosystem on a daily basis or hour by hour. طبعا the target and objective of Saudi Arabia to reach 525 fintechs by 2030 is moving with the fastest pace, and I believe that the lessons that we learned during the last few years to certify fintechs and get them out of the sandbox is now becoming mature and mature. So I am expecting that the upcoming 2 to 3 years, the speed of licensing those fintechs will be much faster, because the understanding is becoming robust and clear to SEMA and the market, and especially with the rotation that's happening between fintechs. So people are moving around with this experience, which is going to make the shift much faster. This is number one. Number two, the maturity of banking as a service and open banking within the banks themselves is becoming also advanced. So today, what companies or banks have learned during the last few years is going to be good to start and move to the next maturity level of providing the open finance and banking as a service to those partners, to banks. The third point is the customer adoption. This was, as mentioned by Ali and my colleague, is very important, because customers now are becoming more mature about using these services. They are more mature and precautions about the fraud cases and how to protect themselves from such kind of services, which will for sure increase the trust and increase accordingly the adoption level of such services. I think this might be the landscape coming into Saudi Arabia market in the coming 3 years. I have just read a paper yesterday about GCC actually in general and transformation that we have. I think collaboration with external partners like China and the States is going to also make a big change to the market during the coming years, especially with the launch of human AI platform in Saudi Arabia and infrastructure. Some banks and today are buying new GPUs for AI usage, and you will start getting more and more use cases of AI and advancement also in that area, which will also speed up the adoption and the market progress.
Thank you. Rahul, you want to have last?
Yeah, sure. So at a macro level, let's look at what the other countries that have developed and gone beyond Saudi Arabia. What have they done? In the US, you see fintechs of all kinds growing and expanding. Of course, you will have frauds like the one you had imposed on JP Morgan, or did JP Morgan invite it upon itself? That's the disputed matter, but there are fintechs who will try and grow way faster and may become a little bit unethical in their own approach. Those will die out. The other fintech category would be where capital runs out and you don't have the money to acquire customers and sort of fund your operations. But fintechs are here to stay. Starbucks, take for example, $200 billion or some gigantic number in their wallets. That's not with them, it's with the bank. Which bank? Nobody knows, nobody cares. Starbucks gives me the service and I pay for my wallet in Starbucks. Ola Money in India, equivalent to Uber. Ola Money runs massive numbers in India. PhonePe, Walmart's largest payment provider operating out of India. 50 million customers, all have small balances, but that makes up gigantic balance for PhonePe. They all will survive. The top runners are yet to be identified in the Middle East. A lot of them are making an effort, and it will surely happen. Banks, the monopoly of banks on finance, I think is now over for the time being. Banks are not the people who will own the customer, in my opinion, in the long run. There will be fintechs, who they will be is a question yet to be sort of figured out.
Thank you. Thank you
There's
very much.
one question from Nashad.
I think because of the time constraint. Okay, Mr. Nashad, Ken, please quickly.
Very small question. I hope you hear me.
Yes.
Are you hear me?
Yes, you can.
At what percent from a scale of say 1 to 100 is the AI world being able to satisfy the need for banks to have their data not explicitly?
يعني today AI usage in banking is almost at the surface yet. We are just scratching the surface. You cannot find AI working in the core service of a bank yet. Just being used as fraud detection, AML, sanctioning, operation. I haven't heard about AI use case actually working as, let's say, designer of a service or a salesperson actually knowing the customer needs, or business development guy inside the bank being replaced by an AI agent, even with this advancement in agentic AI. So my thoughts is that AI is still at very, very high level of understanding the banking services. How do you feel to it?
Yeah, very short note, please. Yeah.
No, I was just going to agree with the same. Even with agentic AIs today, when it comes to banks, it's merely to validate the person and what is their need. But then it will end up connecting them to a human agent, because there's no yet connectivity to the main databases and to the core systems of the
Thank you.
bank.
Ram, last.
Less than 1%. To answer your question specifically, less than 1%, and it's not customer focused, that's a worry. It's more internal focus, because I don't think the banks are themselves very confident of AI working out for anybody across the ecosystem, I think.
Thank you very much. Very big round of applause for the panelists, and thanks for the audience for very nice interaction. And we will be just facilitation for the panelists. Come.